What if you could peer into the future of the crypto market, maybe knowing what might send Bitcoin, Ether, and Solana skyrocketing?
Yeah, or maybe you've just been holding your breath,
Yeah.
waiting for that next big economic event, the one that could dramatically shift the winds in the digital asset space.
Well, if that's you, you are in precisely the right place for that kind of insight today. Welcome to the deep dive. Today, we are plunging headfirst into the very latest crypto market sentiment. We're going to have a laser focus on how a crucial upcoming Federal Reserve decision is, well, poised to influence the movements of Bitcoin, Ether, and Solana.
Right. Our mission today is really to unpack why those kind of gnawing downside fears have suddenly started to ease up a bit. And we'll examine the critical role of the Fed's expected rate cut and, explore what a surprise move could mean for how you understand these volatile, fascinating assets.
Exactly. And this deep dive, it isn't just about throwing numbers at you. We want you to walk away understanding the why behind the market's pulse so you can truly connect the dots between, global economics and the digital asset space.
That's right. For this deep dive, we're primarily drawing our insights from a really timely piece. It's titled Bitcoin Solana News. What's next for BTC? ETH as downside fears ease, significantly ahead of Fed rate cut. It was published just a few days ago, September 15th, 2025. So it gives us a really detailed snapshot of the market right before this potentially pivotal announcement.
Okay.
And we'll also, briefly touch on some other relevant market movements just to give you a more holistic picture of what's influencing the crypto landscape right now.
Great. So let's dive into this market mood shift then, which seems to be the main undercurrent right now. We're hearing that fears of a substantial downside for both Bitcoin and Ether have, well, according to the latest options market data, eased substantially. That sounds like a pretty significant psychological shift for traders and investors, doesn't it?
Oh, absolutely. It really is. This isn't just a small incremental change we're seeing. It's more like a palpable sigh of relief and a notable repositioning away from that heavily bearish sentiment we've seen more recently. The big takeaway here, I think, is that smart money seems to be actively moving away from purely defensive plays.
Yeah.
And that's often, a precursor to sustained upward momentum, not just some temporary bounce.
Okay, let's unpack this a bit more then. How exactly are we observing this easing in the market data? Like, what specific indicators are giving us this clearer picture?
Yeah, good question. We're primarily looking at what's known as the options market data, specifically the call put skew.
Yeah.
For Bitcoin, the 7-day call put skew, which essentially measures how implied volatility is distributed between calls and puts expiring in a week.
Right, calls being bets on price going up, puts on it going down.
Exactly. That skew has dramatically recovered to nearly zero. Just a week ago, that same metric was at a rather bearish 4%. This turnaround, as reported by Amber Data, they're a leading crypto analytics and data firm, it's quite telling.
So going from a bearish 4% to almost zero in just 7 days for Bitcoin's short-term options skew, that is a rapid shift. What does that really signify for those of us who might not be totally fluent in options terminology?
Right. Well, think of skew as a sort of thermometer for the market's directional bias.
Yeah.
It tells us if traders are generally more worried about prices rising or falling.
Okay.
So a positive skew means there's higher demand for call options, which indicates a bullish outlook. Conversely, a negative reading signals higher demand for put options, the ones used for downside protection. That means traders are betting on or maybe just hedging against prices falling.
Got it.
So when this skew recovers back to near zero or even goes positive, it signals that the market's fear of falling prices is significantly lessening. It implies like a perceived reduction in tail risk. That's the risk of those extreme, sort of unlikely market moves way down.
That makes perfect sense. And it's not just the very short-term picture that's improving, is it?
Correct. Yeah, it seems to be a broader trend. The 30 and 60-day option skews, while they're still technically slightly negative, they have also rebounded from last week's lows.
Okay.
So that further signals a noticeable easing of concerns about falling prices over a slightly longer horizon. And for those wondering about Ether, its option skew is actually exhibiting a similar pattern at the time of writing. So this positive shift in sentiment isn't just confined to Bitcoin.
Right. It's branching.
It feels like a broader market movement, yeah.
And we've actually seen this easing fear reflected in recent price movements too, right? Like it's not just abstract data points, it's tangible in the market action.
Precisely. Yeah, Bitcoin has gained over 4% to over $116,000 in 7 days, and Ether has risen nearly 8% to $4,650, according to CoinDesk data. These movements directly coincide with this shift in option sentiment. As of the report, Bitcoin was hovering around, let's see, $114,620, Ether around $4,509, and Solana was at approximately $234. These figures really illustrate this renewed upswing and the market's immediate positive response to those diminished downside concerns.
Okay. Now, all of this easing of fears, it's happening right before what could be the main event, right? The gravitational center of market attention this week. That's the Federal Reserve's imminent decision.
Indeed, yeah. The crypto world and really the broader financial markets, too, are all fixated on the crucial upcoming Fed rate decision. That's scheduled for September 17th. It's really one of those moments when the traditional financial gears, directly influence digital assets.
And what's the widespread expectation here? Are we looking at a rate cut? And I guess, if so, how significant?
Well, the central bank is widely expected to cut rates by 25 basis points, BPS. That's 1/4 of a percentage point. That would bring the target range down to 4%, 4.25%.
Okay, widely expected.
Yeah, and this isn't just a guess. CME's Fed funds futures, those are essentially tradable bets on future interest rates. On the Chicago Mercantile Exchange, they show over 90% probability for this specific 25 BPs cut.
Over 90%, okay.
And what's more, this action is also kind of anticipated to lay the groundwork for additional easing over the coming months. So it might not be just one isolated cut, but potentially the start of a new, maybe sustained trend of monetary loosening.
So if the Fed does exactly what everyone expects, that 25 basis point cut, what does that mean for our key crypto assets, according to the experts like Magadini? Is it going to be like an immediate rocket launch or maybe something more measured?
Well, according to Greg Magadini, he's the director of derivatives at Ambergata, if the decision aligns perfectly with expectations, we're likely to see a continued calm grind higher for Bitcoin.
Yeah, implies kind of steady upward trajectory, perhaps because a 25 BPS cut is, largely priced into the market already, so it prevents those massive surprise-fueled spikes.
Right. Makes sense. For Ether, he suggests it may take another week or so to retest all-time highs and convincingly trade above $5,000. This slight lag for ETH, it could be due to maybe a relatively higher concentration of speculative interest that just takes a bit longer to fully absorb and react to these macro shifts.
Interesting. This raises, I think, an important question. Why do these traditional interest rate cuts by the Fed even matter so much to the, notoriously wild world of crypto? What's the fundamental connection there for our listener?
Yeah, it's actually pretty fundamental. When central banks cut interest rates, it generally makes those traditional lower risk investments, think savings accounts, money market funds, bonds, less attractive because they just yield lower returns. This kind of environment often encourages investors to seek higher returns elsewhere, maybe in riskier assets. And cryptocurrencies, well, with their potential for outsized gains, they definitely fall into that risk-on category. So lower interest rates can essentially increase investor appetite for digital assets, acting as a significant tailwind for their prices. It's kind of a classic search for yield scenario where capital flows from safe havens to growth assets.
Okay, that makes sense. Now, you mentioned earlier there's a slight possibility of a bigger, maybe more aggressive move from the Fed. This is the scenario that could truly send things into overdrive, isn't it? This is where it gets really interesting.
It is. Yeah, while the 25 BPs cut is highly probable, like over 90%, there's still that slight possibility of a jumbo 50 BPs move by the Fed. This is definitely the less likely scenario, but it has the potential for a much, much higher impact on market dynamics.
A wild card.
Think of it as a wild card, exactly. One that could massively re-rate risk assets across the board.
And Greg Magadini had some pretty strong words about what a surprise 50 BPs cut would do. He used a technical term that sounds incredibly bullish. Can you clarify that for us?
He did, yeah. Magadini stated directly in the source that a surprise 50 BPs rate cut would be a massive plus gamma BUY signal for ETH, SOL, and BTC.
Plus gamma.
Okay, so for those maybe not familiar with derivatives, gamma refers to the rate of change in an options delta. Essentially, how sensitive an options price is to changes in the underlying asset's price. A positive gamma signal means that if prices start to move up, the buying pressure, particularly from options market makers who have to rebalance their positions, will accelerate even faster. It creates this kind of explosive, maybe self-reinforcing upward trajectory.
Wow.
He also noted that gold will go absolutely nuts as well, which truly highlights how such an unexpected aggressive easing move wouldn't just affect crypto, it would send pretty significant ripples across wider financial markets, including traditional safe haven assets like gold.
Massive plus gamma BUY signal. This sounds like a market maker's dream scenario for upward momentum. And it looks like Solana might be particularly primed for such a scenario based on the options data we're seeing. What makes SOL stand out here?
That's a keen observation, yeah. The Deribit listed SOL options, Deribit being, a prominent global crypto derivatives exchange, they already exhibit a strong bullish sentiment. Specifically, calls are trading at a 4 or 5 volatility premium to puts. This means that even before any Fed decision, there's already significant anticipation of upward price movement for Solana reflected in its derivatives pricing. This kind of positions SOL uniquely to potentially capitalize on a surprise, larger rate cut. It might even lead the charge if that berserk scenario unfolds.
Like it's already got a head of steam built up.
It's almost like Solana has already built up a head of steam, exactly.
Well, while the Fed's decision is clearly the main driver of short-term sentiment this week, it's crucial to remember that the crypto market doesn't exist in a vacuum. Other significant developments are always happening, right? In the broader tech and financial landscape that can also influence sentiment and maybe long-term valuation.
Absolutely. And it really highlights the kind of foundational infrastructure development that subtly underpins the whole thing and lends long-term credibility to the entire digital economy, including crypto. One key example is that CoreWeave deal, their $6.3 billion agreement with NVIDIA.
Right.
Now, this isn't directly crypto, but it's very relevant because NVIDIA has agreed to purchase CoreWeave's unsold computing capacity all the way through 2032.
Wow, $6.3 billion for computing capacity. That's huge. How did the market react to that, and what's the deeper connection for us, in the crypto community?
Well, CoreWeave stock, CRWV, it rose roughly 5% right after the announcement. It was rebounding from some declines they'd experienced over the summer. What's fascinating here, I think, is that NVIDIA is already a key investor in CoreWeave. They held 24.3 million CRWV shares, valued at about $3.96 billion at the end of Q2.
Okay, so they're already heavily invested.
Yeah. And this isn't just some tech deal. It's really about the increasing demand for high-performance computing. That's the very engine that powers complex operations in AI, machine learning, and yes, blockchain networks. So it signals this robust underlying infrastructure growth that indirectly validates and strengthens the broader digital asset ecosystem. It makes it a more attractive investment space for long-term holders, regardless of the daily price swings.
Right. It's about the foundations.
It's a testament, really, to the increasing institutional capital flowing into the underlying technology itself.
And just to give a sense of the dynamic, ever-evolving nature of this space, the source material also quickly mentions other concurrent market activities. For instance, Helios, a Solana treasury firm, recently raised $500 million. And American Express introduced blockchain-based travel stamps. Now, we're not diving super deep into these today, but what do these smaller headlines kind of signal about the broader ecosystem?
Yeah, they're important signals, I think, of increasing institutional interest and, maybe more importantly, real-world application. Helios raising $500 million indicates significant investor confidence in the Solana ecosystem's future growth and its utility.
Right.
And American Express, a global financial giant, exploring blockchain with travel stamps. Well, it demonstrates that established players are moving beyond just theoretical interest. They're actively integrating blockchain technology into consumer-facing products.
Interesting.
These moves really reinforce the idea that blockchain is maturing and finding legitimate use cases beyond just, speculative assets. It lends a quiet but powerful validation to the entire space.
Okay, so let's try and connect all these dots for our listener. What does this all mean for you as someone trying to navigate this incredibly dynamic market? We've talked about easing fears, the Fed's pivotal role, potential market reactions, plus these foundational tech shifts.
Well, if we connect this to the bigger picture, I think it really underscores the direct and frankly powerful link between traditional macroeconomic decisions like interest rate changes and their immediate impact on digital assets. Crypto markets, despite their reputation for being distinct and maybe independent, they are deeply sensitive to these broader financial currents. This means understanding macroeconomics isn't just for traditional finance folks anymore. It's become a vital lens for crypto investors too.
And it's not just the action itself, the actual rate cut, but even the expectation of a Fed move that can significantly shift market sentiment. We saw that with the options skew recovery. A surprise then could create these exponential reactions across these assets. It really highlights the psychological aspect of market pricing.
Exactly. And it raises an important question, doesn't it? How much of the crypto market's future is truly shaped by its own internal dynamics, like tech developments within crypto itself? And how much is merely a reflection of these larger traditional financial tides, like Fed policy? The CoreWeave deal with NVIDIA also points to how innovations in broader tech infrastructure are not just, running parallel to crypto, but are often foundational to the crypto world. They strengthen its long-term viability. It suggests that while, yeah, the daily price swings are captivating, the underlying technological evolution is steadily building a more robust future for digital assets.
This has been an incredible deep dive, really peeling back the layers on what feels like a pivotal moment for the crypto market. We've seen how downside fears for Bitcoin and Ether are easing, which is setting the stage for that crucial Federal Reserve rate decision.
Mhm.
A 25 basis point cut is widely expected, likely leading to that calm grind higher for BTC and maybe a retest of all-time highs for ETH eventually.
Right, the baseline scenario.
But definitely keep your eyes open for that berserk scenario, a surprise 50 basis point cut. That could potentially send BTC, ETH, and especially SOL soaring, given Solana's already bullish option sentiment.
Yeah, that's the wild card.
And remember, those foundational tech deals like CoreWeave and NVIDIA, they're quietly building the landscape beneath it all, influencing the long-term trajectory.
Definitely. And, as we watch for Wednesday's announcement, maybe consider this. Knowing how sensitive these markets are to global economic policy, what other macroeconomic indicators might you start watching to maybe better anticipate crypto's next big move?
Hmm.
Things like inflation data, employment reports, consumer spending. Maybe those traditional economic levers offer more clues to the crypto world's direction than you initially thought. It kind of reveals that crypto is truly becoming integrated into the global financial fabric.
Food for thought indeed. That's all for this deep dive. We hope you feel a little more informed, maybe a little more prepared, and definitely a lot more curious about what's next. We'll catch you on the next one.